Hello and welcome to the Crypto Club and Digital Assets Weekly Catch Up on Zoom. It is Sunday, the 18th of August, 2024, and this week we're going to be talking about whatever we want to talk about. We hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time. They're open to everybody, novices and experts alike. The topics we tend to cover depend entirely on the audience. So we may talk about blockchain, crypto, DeFi, NFTs, ICOs, SCO, any other three-letter acronym really. Sometimes we delve into the metaverse, central bank digital currencies, and anything else that's happening in the digital asset space. Hope you enjoy this week's session. Do click on the like to subscribe, and also if you'd like to join a session in the future, then click on the link below, which gives joining details. With that, let's see who's going to come and join us today. So you doing anything interesting at the moment, crypto-wise, blockchain-wise?
Well, my plan was, as I've mentioned, I was looking at crypto arbitrage. So I thought one thing I kind of figured out was I sort of revisited a platform I hadn't used for a while called Quant Connect, and that's that allows you to sort of backtest systems on crypto and other assets. And I've actually
Okay.
got a tutorial which is a few years old, which I think is a little bit out of date. So I started looking at that, and that was based on the C# language. But then I thought, well, a lot of stuff is done in Python now on that platform, in terms of crypto and non-crypto.
Mhm.
So I bought a more up-to-date tutorial this week. So I started looking at Quant Connect again.
Okay.
So and apparently, I did a bit of googling, and about 100 hedge funds do use Quant Connect. Um, Again, I'm not sure if it's crypto or non-crypto, or maybe both. But the only thing is the avenue that I'm going down in terms of starting to look at crypto arbitrage. People have sort of looked at those ideas, have said, well, we found interesting stuff, but we haven't actually proven that it's profitable. So I'm thinking, well, you can spend a lot of your spare time going down this avenue,
Yeah.
and it might be interesting in terms of writing programming and testing them and upping my knowledge. But is it going to deliver in terms of anything that can actually make money? That's the thing. So then you have to sort of step back and think, well, what is the objective? I mean, I had a brief look again at flash loans, and again, um, the sort of material is kind of sketchy in terms of what's out there, in terms of some of these platforms like Aave support flash loans, and you have to sort of learn a certain tech stack in terms of learning Solidity, which, as I'm sure you know, is one of the programming languages for
Yep.
smart contracts. And again, it's not. I don't think it's too difficult to sort of pick up some of the stuff in terms of from the tech side. But the question is then, can it translate into something, profitable? And is it a case of the economies of scale in terms of what people have said for Binance is if you're trying to say do arbitrage trading on Binance, you're not going to be profitable because you're up against the people who've got, the co-located servers. And this is
Yep.
something we were mentioning last week.
Yep.
So are you sort of going down a blind alley? So I'm not sure. I suppose for me, I'm not quite sure what my direction is in terms of what my aims are with crypto. I guess my ideal aim would be some form of trading strategy around crypto. Um, but if it's not crypto arbitrage or flash loans, for example, then I suppose then you could just treat it as a kind of hobby and say, well, I'll learn as much as I can about the space without having necessarily an aim as
Mhm.
such. I know
Okay.
you can from I suppose from a point of view of working in the field, you could have the aim of, for example, being a blockchain developer, and then if that's the aim, then that would be a different objective to, building trading strategies
Yep.
around crypto, which
So,
I
so,
suppose is a much clearer path in that respect in terms of, well, then I just have to sort of learn, various technology stacks and be proficient in terms of someone wants to hire somebody with that skill set. And that might take you a year to learn, for example, and get the necessary certifications or whatever. Um, but then that's a clearly defined path rather than the
I
sort of,
think it comes back, as I always say to people, whatever the subject really, what is the end game? What is it you're trying to end up in? Sorry, I just want to say hi to, it says KB. Is that Katie? Is that right? I've gone because I think you've been on before, KB. Oh, she's
sorry,
gone.
is something different popping up on my Zoom?
No. You're okay, Manny. You're good. It's just that we've been joined by someone else who's joined us. She's turned the camera off. KB.
Hello. Yeah, hi, I'm here.
I
Hmm?
couldn't remember. Did you come on the other week?
No, it's my first time.
Sorry. Okay. We get lots of new people coming on, and we get some regulars who sometimes join us, and it varies completely from week to week. And sometimes someone just looks familiar, and I thought you looked familiar for some reason. So, not a
Well,
problem.
if you have been watching MTV in the 90s, I used to be a presenter there, but I don't know if it's from
Oh,
there. You,
oh wow. Okay. So, are you in fact Max Headroom then?
am I in what?
Are you in fact Max Headroom? Well, wasn't he
No,
from?
no.
He was from the MTV era, if I remember correctly.
Yeah,
MTV
I think he
days.
was.
Yeah,
Yeah,
no, no,
he was
it was
80s stroke 90s, wasn't he?
Yeah.
Yeah.
90s. Yes.
Classic. Well, welcome aboard, and thank you for joining us. That's good.
Thank you.
We're just chatting generally. Manny was talking about he's got an interest. His background, if I remember correctly, is like high frequency trading and traditional trading, um, and is looking at learning blockchain, stroke crypto, stroke Web3, stroke whatever, to work out ways of exploiting, I guess, his knowledge of traditional trading in the crypto world. Is that a fair way of describing it, Manny?
Yeah, I mean, to be honest with you, I have to be sort of brutal and say that my day job, until I lost my job about a year back, was just, working in a standard programming role rather than in trading. And since then, I thought, well, I didn't really want to go back to the 9 to 5, so I'm just testing some stuff at the moment. And
Mhm.
what I'm actually trying to do in the way of traditional trading is, heard a bit of a guidance from a friend of mine who knows, a decent amount about this area in terms of futures trading, non crypto. Um, is I'm trying to build algos that sort of give you good signals, but then it's up to you as a human to translate those signals into live trade. So that, for example, you've got U.S. companies that you have to pass a funding trial, you have to make a certain amount of profit, and you don't have a time limit as such, but you've got certain rules in terms of how much money in a simulated account you're allowed to win or lose,
Yeah.
and you have to win. So you start with a hypothetical $50,000 account, and you have to get to 53,000. And this week I actually got a little bit burned in terms of trying to pass that test. I actually came near the exit point. I almost failed the test. So this weekend I've just been doing a bit of brainstorming in terms of which signals that I want to try and use, and try and reattempt that test in the next week or two. But that very much is. I don't know if you can see just behind me the screens there,
Yeah.
and if you can
Yeah.
see some of the
Look,
charts. That's
looks
actually
like it.
Ninja Trader. So I'm
Okay.
using something called Ninja Trader, and I've kind of written a lot of code myself to try and. I've taken third-party tools that people have developed and kind of merged those together, and I'm using bits of AI and bits of fuzzy logic. But again, it's really. I mean, I could translate this stuff to crypto. There's nothing stopping me. You can get crypto data into NinjaTrader, but I haven't really looked at crypto within NinjaTrader yet. I
Okay.
mean, the I suppose my ideas, as I mentioned just earlier, were the ideas I had with crypto, and people who seem to know what they're talking about in the space have said StatArb is the area you want to look at, rather than necessarily trying to predict the movement of Bitcoin. What's it going to do in the next minute? You're just
Mhm.
looking at the sort of looking at arbitraging price discrepancies. But again,
Yeah.
just as what I said 10 minutes ago, without repeating myself again and again, I'm not sure how much mileage there is in that anymore. I think from what I can gather, I'm listening to an audio book at the moment, and it's based around Sam Bankman-Fried, I think his name is, the guy who ran FTC Capital. If you
Okay.
remember that went under, and
Yeah.
he's
Yeah.
got, I think he's been sentenced to 25 years or something like that. If
I
I'm right.
think it's certainly a substantial. Uh, sorry, I was just typing in the chat just then to KB. I meant to write in "do come back" and I've inadvertently written
No
"no
comeback.
come back."
With Sam Bankman-Fried, I'm listening to his audiobook, and from what I can gather, and this is someone who, you know, I mean, he really knew his stuff. I know you kind of messed up in the end, and I haven't listened to the whole audiobook yet, so I don't know exactly how everything went wrong. But this guy was really, really sharp. I mean, way, way smarter than me in terms of his maths ability, and some of the people he had around him in terms of programmers. And it's quite an interesting story how he went from sort of being this quite sort of strange character, kind of lacked social skills. But then he ended up working for a high frequency trading firm in America. Then he left, and then he set up his own crypto venture. But he had these kind of conflicting aims in terms of he wanted to be rich, but he wanted to help people. It's kind of a bit of a weird story. If you start listening.
I think when you look at some of the stories behind the stories, it all starts seeming a little bit suspicious, shall we say?
Yeah. And so I haven't listened to all of it, but the point I'm making is that in that story, they go through the timeline of sort of the crypto evolution, and back in, say, 2017, you still had an edge. So these high frequency firms who got into the crypto, space at that point, they were still, they had a smart enough team, they had the infrastructure, they had the money behind them. At that point, I think they were able to exploit the kind of stuff I've been talking about.
Yep.
Now I think it's much harder. So I'm sure there are probably still people in that space, but that sort of, honeymoon period that you had, that if you're a smart guy and you had a smart team and you had enough money behind you, you could probably do something. Now I think it's much harder. So going back to your question about, I think for me it's just a question of, I think the most likely outcome for me personally is to try and just find some mileage, stick to what I know in terms of the traditional trading space, try and nail that within the next few months, hopefully, and get that to a reasonable amount where you can make consistently, I don't know, say, $500 a day, for example, which would be a good enough income, for me, for example, if I could do that consistently. But with the crypto, I would treat that just as a hobby, kind of. Try and learn, try and soak up as much knowledge week on week as you can, but not necessarily assume that it's going to lead to any kind of amazing trading algorithm.
Well, talking about soaking up knowledge, we've got Elena who's just joined us, and I think Elena is one of the best people for soaking up knowledge, because she's been learning for quite some time. She's been one of the kind of like stalwarts of this session that we hold each week, and she's gone from relative novice, shall we say, to I think highly knowledgeable, and I think she knows a lot more than she'll ever admit to.
Thank you very much, Gary. It's nice to see you again after I missed a couple of sessions.
Yeah, you've been away.
It's nice to meet you, Manmohan.
Yeah, nice to meet you. You can call me Manny for short, because my real name Manmohan is a bit of a mouthful, so Manny's a little easier to say.
Both versions are nice.
Okay, thank you.
Yeah, it's a shame that we did have another guest on a few minutes ago who I was describing as KB. She had to drop off, unfortunately. It'd be interested to see what she has to say in future. She says she was involved in something called a BTC Safe Zone, which is something I'm not familiar with. So I'd love to learn more about that if she comes back again. But Manny, come back to your point. I've seen this a number of occasions where people have been experienced in, whether it's share trading or particularly in the FX markets or foreign exchange trading. And they've tried to then apply what they've done in those marketplaces to the crypto markets. There are similarities. Ultimately, the very fact you've got trading screens. If you look at Binance, that looks like a traditional, trading screen with candles and buys and sells and all that kind of thing. But I keep telling people that the kind of like the behavior and nature of crypto is not quite the same as traditional stocks, shares, and FX markets. And this is where I've seen some companies who have basically said, "Oh, well, we're really good on FX trading, and what we're going to do is we're going to use our FX trading algorithms and we'll apply them to crypto, and we're going to make loads and loads of money." And usually they've gone bust within a few months, because just the nature of them is there's something different. And I think it's partly because, well, foreign exchange, first of all, dollars, pounds, euros, fundamentally have a degree of governmental support backing economic stability and everything, which crypto doesn't have. And when you look at shares and that, shares are fundamentally backed by the companies who've got the assets and everything. And again, crypto doesn't have that. So
Yeah, you're absolutely right. It doesn't the dynamics that drive the crypto markets. There might be some similarities, but they're inherently different. So you can't necessarily apply the same algorithm as you use in FX or stocks to crypto.
yeah. What you can do, and it's exactly what you are doing though, is that you can learn how to utilize the technologies. So whether that's how you use some sort of trading strategies and you pulling in the trading data, or whether you're looking at things like sentiment analysis, if you're pulling in like social media feeds or that kind of thing, the technology to do that is pretty much the same. It's just the behavior of the market is a little bit different. So interesting, and it's fascinating to learn about it, isn't it?
Yeah, I mean, I'm sure some of the stuff that you mentioned in terms of sentiment, that there could be some mileage there. I'm sure people are definitely looking at sentiment in terms of in the traditional space, and then, I mean, one company where I did a training program a few years back, I think they've developed some proprietary software that reads the news and sort of tries to give their traders some basically, as news releases come out, it gives the traders an indication as to what might happen, especially around key news events.
Yep.
So things like the ECB rate decision, for example. So rather than them having to sort of read the Reuters feed manually, they've got some software which is in real time reading that news and deciding what kind of sentiment is prevailing. And so, yeah, certainly something like that could be, some kind of data mining, etc. I'm sure people are using that both in crypto and non-crypto. But again, you said, as you said, that within the crypto space, you've got to allow for the different behavior of the crypto market. And yeah.
I was going to say, I found it interesting because I took a look at some algorithms that do exactly that. So that they take in social media feeds, whether that's websites, Reuters, Twitter, X Spaces, whatever, and you basically give it rules and parameters and configurations for which it then went off and did like trading recommendations, that kind of thing. But what I found really interesting was that, first of all, you had to have a good understanding of those social media feeds to begin with, to understand how they worked. Then it's like the whole thing of, well, when Elon Musk quotes the word crypto, then crypto
Things
prices, usually. And if he says Doge, Dogecoin's going to go up and that kind of thing. So there are certain things where there's a high degree of correlation of behavior and activity. But beyond that, then training your AI agents to know that, as you say, ECB or the US Fed puts up interest rates by 0.5% or something. Is that a time to buy crypto or sell crypto? What I found was that the trading bots that people were trying out with all these algorithms just became a very efficient way of losing your money faster. Which is not what you want. So it's kind of interesting.
Yeah, I think it's hard in terms of, obviously, there's a lot of information that these AI agents are trained on, but then how sensitive are they to these bits of information? How would they then decide, like you said, if an interest rate decision, how would that affect a crypto market? And would it affect it in the same way every time this kind of news comes out? I think that's a tricky one. And I think with certainly what you've mentioned in terms of Dogecoin, there's definitely a hype element there. So someone like Elon Musk just has to say buy Dogecoin. And in fact, I actually watched, I think it was a Netflix or Amazon documentary about one of the guys who got rich. Well, on paper, this guy he had his own YouTube channel and he was pumping up Dogecoin, and Elon Musk pumped it up while I think he invested something like $100,000 in it. It rocketed up to 3 million, his investment. And all his friends were telling him to sell it. But he was suddenly, no, this is going to the moon. Yeah. And then in the end, I think he ended up basically losing all of his profit
Mhm.
and then just in tears, basically, because it had obviously been, hyped up by people like Elon Musk and then it plummeted down. So that's the kind of thing. Well, how would you, again, train an AI engine to detect
Yep.
all of that? And, yeah.
And it's interesting. I did as an exercise a while ago. I took a look at Bitcoin price spikes because whenever you're in any groups or anything, people always say, "Oh, what caused the price to go up? What caused the price to go down?" And I say these days, usually it's a butterfly flapping its wings in the Amazon. And if you understand chaos theory, then that's what it's all about. There's some random event happened somewhere which has led to something. So I did some analysis just to prove this of Bitcoin prices at one point of price spikes compared to news items. Because some people say, oh, crypto is it is correlated to world events and that kind of thing. So I actually did it where I looked at the BBC and they provided a capability that if you put a particular date in, it would tell you all the big news items on that date. So I looked over a year of all the Bitcoin price spikes of when it rocketed up and what the correlated news was that day.
Okay.
And it was fascinating because it was always one thing whereby a news item within 24 hours, there was then a price spike. And do you know what that news item always was? No.
Well, no.
It was an announcement of a major change in a Premier League football club. And so what it basically did, it proved that there might be a correlation, but there's no causation.
Yeah, I mean, that's the thing that what you've just hit the nail on the head there is that correlation is not causation. So obviously it's obvious, I would say intuitively obvious that you couldn't use Premier League data to predict crypto, but obviously there was that correlation there. But
and that is the bizarre thing, because this is where AI can start having a weird effect. Because actually, if you stop questioning that and accept that there is a correlation, even though there shouldn't be, then that does become a predictive correlation. That's fascinating. Sorry, we got Ken joined us as well. Ken's been listening intently. I just want to say hi as well. Hey, because Ken's more into the Web3 space, I think, and Ethereum and this kind of stuff. Is that right?
Yeah. It's interesting listening to you guys talk about the trading strategies. Which is, I mean, I'm not really a trader. I'd probably say most of my stuff in it would be more of an investor, a long-term holder. But like I say, I do actually find it quite interesting speaking to traders. It does, but like you say, there are some who actually have done quite well on the trading scene. So you can, but like you said, it's a high risk. I think it's eToro or something like that. I can't remember the exact brand, but apparently on the front page it says that 70% or 79% of their customers lose money.
Yeah.
Like as a warning sign before you sign. I was like, what?
I used to go to share trading groups in London, and they'd be sponsored by some of the brokers and that kind of thing. And they said exactly the same. And I think I've said it on these sessions before now, that typically 80% of their clients lose money. But the 80% always think that they're about to be the 20% who do make money. And it doesn't work that way. And usually they run out of money and they lose interest, or they learn from their lessons and they learn about things like risk management and portfolio management, and they get a bit wiser, and that allows them to lose money a little more slowly, and then eventually some of them do make some money.
What about
but
those
you're right.
who use the charting strategies and stuff? I mean, you see it all over the place. I don't know, the Fibonacci charts and all that. Do they work?
It depends what you mean by do they work. And it depends over.
So I'd say, I mean, for me personally, it's been a long journey, and I've tried to use programming and algos to sort of nail what we call the mid-frequency space. So I think, just saying earlier, you can kind of see some of my charts and stuff there, but I've probably gone way beyond what the sort of average person who just sets up an account and tries to, have a punt. So I'm trying to use some AI and all kinds of programs to detect moves, but it's easier said than done. So even though I'm throwing some fairly, decent AI and stuff at it, it's still a tough game. And fingers crossed, hopefully in the next couple of months, I'd like to see some, a decent some of the strategies that I'm looking at. I think the Nasdaq is one of the markets I'm looking at. That's very, very volatile, whereas the S&P is a little bit slower, and that might be easier for me to trade on a manual basis. But in terms of what you're talking about, some of this technical analysis stuff that you see around, where you just see, people talking about head and shoulders patterns and this kind of stuff, I would say it's very, very unlikely that there might be a handful of people out there who have some success with just looking at a chart and saying, well, that's a trend. And this is the kind of stuff that you see quite often from some of these trading gurus. They'll do webinars and seminars, and I've paid for some of this stuff myself many years back, where there are people sort of out there teaching you how to trade, and they're showing you, they're telling you to look for certain patterns on charts. But I'd say without some element of systemization or some algo, it's going to be very, very difficult for the average investor to have any degree of success, I would say, without any kind of systematic approach. Even if they're using a system and then trading that manually, that's still better than someone just trying to look for chart patterns, which I think it may be that somebody just gets lucky, and looks at Bitcoin and says, oh, I see it's bottoming out and I'm going to buy because I can see a sort of double bottom pattern. But I would say, yeah, certainly there's tons of charting platforms out there, and some of them, like NinjaTrader that you can see here, is quite sophisticated in terms of it allows you to do a lot of stuff, especially if you know how to code. But certainly there's some very, very good platforms out there. And as I was saying earlier on, Quant Connect is one that I sort of hadn't looked at for a while, but on the basis of us discussing crypto, Quant Connect has the capability to do back testing on crypto. So I started looking at that again recently. But yeah, I mean, I'd say for the average investor, and it may be for myself as well. I mean, time will tell whether some of the strategies I'm looking at, whether I can getting any mileage out of them. But I'd say for the vast majority, it's probably greater than 80% in reality, I would say, in terms of the lay investor. It's different, of course, for the high frequency trading firms or the crypto firms who have a lot of money behind them, and they might be doing some kind of sophisticated arbitrage strategy or strategies.
I'd offer some other things as well, Ken. You think about it, there's two main kind of like types of metric trading, where we're using indicators and that kind of thing. I'll quickly show you what I was thinking. But you think about, first of all, there are those who do chart analysis. So this is where you'll hear terms like head and shoulders and double bottoms and all this kind of thing. Well, you look at the Bitcoin charts. This is it live now, and you can see things going up and down, this kind of thing. Well, this is the 7-day chart, and all you can see generally is like, well, it looks like it's not actually doing that much at the moment. It's kind of like stabilizing, it's channeling between a certain range. But if you extend that out to the year chart, actually Bitcoin is up over 100% over a year. So straight away, depending upon the period of time you're looking at, you get a different picture. So if you look at just trading for today, if you're doing things like scalp trading, then you can see all these peaks and troughs, and there's opportunities in there. So some people are quite good at doing things like looking at the charts, looking at the candles, that kind of thing. Then the other way of doing it, you mentioned the indicators. Well, you just have a look. Here's a chart with just a few indicators on it. This has got moving averages, it's got EMAs, I think I've got RSI on, which is resistance, volumes. it goes back to what I was saying before about when you've got an algo that is using social media signals, that you have to, first of all, know what all of these indicators are, because there are loads of them, and you have to understand what they mean, and you have to understand what the real impact is. So you get things that there are simple ones where you've got a short average and a long average crossing. When you get a crossover points, we've got one here, that is usually an indication that the price is going to rise. So sure enough, you got a chart here, crossover points, and indeed Bitcoin price rose for a while, I think. And you get people, I think as Manny was saying, who run training courses on this and explain how to spot these things. They're always very, very good at demonstrating how well this charting technique works on the past. And they'll always say, as I did then, well, have a look here, and here's a crossover point, and you'd expect that to go up in price, and sure enough, it did. I only said that because I could see on the chart already it did. So it sounded for a moment as though I was talking a good story and I was validating the data. And you get that a lot with people who do like crypto trading classes and that whenever they're talking about the charts, they'll come up with great examples of looking at old data to say, here's a good example of how this works. But it doesn't work every time, and they don't tell you that. So, and most crypto is, or the trading data is retrospective. It's looking back at what has already happened. And you can't always use that to say what is going to happen. So that's my thinking anyway.
Yeah, I mean, you can go and buy systems as well. So somebody might say, well, I'll make it a bit more systematic and a bit more objective. So here's an algorithm I built, and you can buy this algorithm for, there are companies out there selling you, algos for example, NinjaTrader, and which is a platform I use, and some of them are reasonable in terms of they might try. I think there's one week-long series of webinars that I went to for this company, I think in America, and at first they said, that our systems would cost a total of $10,000, and we're going to give you 20 systems for $2,000. So, which actually isn't too bad. It's like $100 per algo. But what they'll do is they'll show you the back-tested results. So they'll say, well, this is what it would have done over the last year, and it would have made you this amount of money. But then, like you just said, someone can prove they can optimize it over the last year's data. So they can optimize the parameters of that system to make it look like it works great. But then you run it forward in real time, and it won't give you the same performance. And actually, one red flag with that company was that somebody asked, well, you guys run a trading room where you just do subjective style trading, where you're just looking at patterns, as you mentioned. But do you do a trading room for the systems that you're selling? And they said they didn't. And I thought that was really strange that they're plugging you thousands of dollars worth of all these different systems. And some of them look great. They're doing some quite clever stuff in terms of looking at the actual orders that come in, all that kind of stuff. So they're looking at the order flow. Again, this was kind of crypto and non-crypto. But you're showing all these great systems. You're talking about what they could have done based on past results. But why are you not then, if they're so great, why are you not running a trading room based on these things?
Exactly.
So
and the answer is because their real profit is made out of selling the system, and selling the training. Yeah. Or the other one, and you're getting this more and more now as people use things like Patreon as like a subscriber type thing, that they have effectively a following base of people that pay to listen and learn and that kind of thing, and they get recommendations and that kind of thing from there. The other route as well, Ken, I think you mentioned eToro earlier on, is eToro do a copy trading facility. And this is where it's kind of a lazy way of getting other people to work out your trading for you. So if you want to learn about trading, it's not a good way of doing it. But for those who are interested in it, all it does is that eToro, you become a member or whatever, and people get set up profiles. And if you happen to have a good trading reputation, as in, you seem to do quite well consistently in that, people can start saying, instead of me investing in Bitcoin or shares or whatever, I'm just going to put so much money in, and I want eToro to replicate whatever Gary is doing or whatever Manny is doing or whatever, and it just copy trades it. So it just follows the trade. So if Manny puts a trade on to buy Bitcoin, it puts a trade on to buy Bitcoin and all this kind of thing. So
Well,
what it
I mean,
go on,
I've seen
go on.
I've seen those around being advertised, but in my mind, I always thought, well, whoever's the main guy is just front running everybody else.
Well, this is the
Because if,
thing that they do try and avoid that if they can, but there is definitely the risk.
yeah,
Because
because if somebody puts a trade, that pushes the price up. And so if you put a trade, by definition, you're going to pay a higher price than they did.
Yeah,
and you think about it, what would be the temptation there? If you've got 1,000 followers who you know are going to copy trade you, then you're going to put a buy order in. You're probably going to put a buy order in which is a margin one, so you're not even paying the full amount. And then you're going to tell everybody that you're now putting in a real trade. So you'd have two accounts, a shadow account and a real one. You'd put the trade in on a real account as well. That would cause it to all go up, and then your shadow trade would make a profit straight away. So yeah, I agree. There is that risk.
And then you just, as soon as it goes, you sell it, and then you tell everybody you're selling. So if it dumps, it doesn't matter. You've already made your.
Well, even better than that, you now use the money that your shadow account has made to short it. So you can't go wrong with this, can you? Or I'm sure you can.
I think it very much depends on the markets and the liquidity. So, for example, one of the markets I look at is the Nasdaq, and the Nasdaq sounds like, in terms of the futures markets, obviously there's different variations of how to trade these markets. So you've got things like spread betting, CFDs. But if you just look at, for example, then certainly the Nasdaq is one where you could have possibly that kind of manipulation because it's what you call a not liquid market. So if you look at a depth of market, which is like a trading ladder, for someone who's looked more in depth at futures markets, the E-mini, the S&P is a very liquid market. It would be harder to manipulate. And then you're up against, the high frequency trading firms and the algos. But if you look at some of the thinner markets like the Nasdaq, which sounds like when you say the Nasdaq, you think it's such a huge market that how could it possibly be manipulated? But it's not actually, when you look at the numbers on the screen, if you're just looking at the raw futures market, it's not that liquid. So the kind of manipulation you're talking about could possibly happen. And certainly in terms of, somebody driving up the price and then getting all these customer accounts to copy their trades. So yes, certainly somebody could be effectively running a nice little, almost a scam doing that, I suppose. But then if the guys who are copying them are making money, then it's not a scam, or making some money, maybe not as much as that.
I mean, I suppose if the person, if whoever you're following and you're making money, then it doesn't matter if they make extra money because you're in a positive.
Mm-hmm.
Yep.
Yeah.
But
I mean,
go ahead, Ken. Sorry.
I mean, like I said, with trading, I just think it's so much effort. I think I told you before that I just wait for when I think that the market's bottomed, and then I basically purchase and then just hold for another sort of nearly 4 years. The total market bottomed about a year ago in December at 800. It was around 828 billion, the full market. I mean, Bitcoin, everything you looked at was down. And but I started buying because I thought it would bottom in November. So I was just like, buying through that November all the way till December, a bit of January, and then I just stopped when the Bitcoin ETF got approved. We were like, okay, well, now the market's going to go up, and it has. So it's gone from there, from under 1 trillion market cap, and it's now what, 2.4 or something like that, around 2 point something trillion. It did go up to 2.9 or something, and it's come down. And a lot of people are saying, oh well, the market's down. But obviously, if you're trading daily, yes, the market's down. But if you're just holding over a long period of time, then it's not really down. So just ride through all the way until until you get the real crash. The real crash will come when something happens. Like FTX was well, actually, it wasn't the FTX. It was Celsius. I think was the big.
Yep.
When Celsius went down, it brought down a lot of the big firms, trading firms around it. Market really crashed. Now is the time to come out. And those who are like 50-50 on whether they should or shouldn't come out, then FTX was like kind of should have basically said, look, it's time to get out. I think that was 2022, November. But then after that, you just have to wait and see where you think is bottom and then just hold again, because that seems to be the crypto market. But having said that, the best strategy is to hold over a longer period of time, 8 years, 10 years.
Yeah, I mean, obviously you're gonna in that period you're gonna have to sit through the dips and the highs and the lows. But obviously, if the fundamentals are intact, then sure. If as long as Bitcoin doesn't have a severe crash where it goes down to sort of $10,000 or something, then certainly if Bitcoin. But if you're diversified, then I guess that's less of a risk.
Well, no, because when you have a crash, everything drops. Everything drops. I mean, Bitcoin's dropped 90% 4 or 5 times before. I mean, I remember when Ethereum was, I think it was 2000 something. It went up from there. It dropped all the way down to about $70, just under $80. And I remember this is 2018. I mean, this is when Gary was still doing his face-to-face live things, and it went from being really packed to really empty as everybody just left. And I was like,
is that why everybody's disappeared and you only have 4 or 5 people each week?
Well, yeah, 50. But I mean, in those were like the best times. The bear market was the best times because you had the best projects pitching. It was unbelievable. I used to go to this monthly thing, ETH London, and you'd have a lot of things like Algorand. I mean, the guy, he's literally the equivalent of Science Nobel Prize winner. He was there pitching at the height of the bear market. And look at Algorand now. I mean, Monolith, which is now changed to Token Card, one of the first kind of like credit card things, whatever. They're now expanding all over Latin America and stuff like that. It was just a bastion. Even Vitalik came around about twice because, I mean, they booked a room of 400 people, and I think they couldn't. Usually, before that, during the hype, when Vitalik came, it was like standing room only, and they had to like close the door and not let people in. This time, I think there was probably about 320. There was basically seats available on that time. So the bear market is where you really find the good stuff. And when it comes to the bull market, it's harder. It's very hard because there's so much going on. It overwhelms everyone. Well, it overwhelms me anyway. I just it's the time where I'm just like, okay, let's see if we can take some profits or not, because you get a lot of people who come in with really good sounding projects, but when you check their websites, all they've got is like a website, and you ask them, "Oh, can I see your tech?" And they're like, "Oh, well, they just send you stories." So that's the difference about just being in this market for a very long time. And the traders, though, I mean, there's the biggest people who I see who have done really well with trading are the influencers. That's because they get early allocations, and they do that. But every now and then you go to a conference and you find somebody who you don't know at all, and they'll say, "Oh, I live, I don't know, off this island or something," and they're traders, full-time traders. So that's all they do 24/7. It's very interesting. The mindset of a trader is completely different from my mindset. My mindset, I'm like, oh, it's going up, it's going down. Whereas traders just they live off the information. It's really, I think it's a very you basically need to be really kind of like a sharp 24/7, especially with crypto being a 24/7 market.
And unemotional is the other thing, I think, because this is the sort of thing I've seen it in share trading, I've seen it in commodities markets, and I've seen it in crypto. You have to learn how to be unemotional.
Well,
so if a trade goes wrong, it goes wrong. Big deal. Move on.
Yeah, it is a very, like I say, it's a very, because if someone like me who looks over the long term, any dips, I see those as just a short-term thing. I'm not really too bothered. But if that's your bread and butter and you're just like looking to short here and long there and short. It is really interesting. I mean, we did have an issue. I don't know if you heard about it, the compound governance attack.
No?
No.
Yeah, so that was interesting. So you had this guy, he went under the name of Humpy, I think it was called Humpy or Humphrey, that was his pseudonym.
Okay.
So he put through a governance kind of proposal, but I kept going. I mean, reason this comes to mind is because there's a lot of speculation that that guy Humphrey is a trader. So he put in a proposal to move some of the tokens, equivalent to about 1% of the tokens, which can give you control because not a lot of people vote in these governance things. And it failed a couple of times, and then the third time he put it through and it went through, and he put it through like in the middle of the night when everybody's asleep would be the end and so forth, so people don't know. And because also it's the same proposal over and over again, not a lot of people voted because they're thinking, well, this proposal's been there and it's already been done. Anyway, he then in the last minute had set up loads of wallets and in the last minute voted for his proposal on these pseudo wallets, and it passed, and it was just an amazing kind of like what basically went after happened after that. The money was to be put to this multi-sig, I think he called it Monkey or something like that. And he said there was like a whole load of people, but everybody was like, no, that's just a pseudo wallet, he controls it. And the governance committee had to like work out a way of trying to see if they can basically get him to stand down or put on a poison pill before the smart contract executes, because it was a time now, it's a time sensitive. And a lot of people were watching his wallets, and he was doing all sorts of sophisticated trades apparently. And so it was really hard to track exactly what he was up to. But in the end, basically, he decided to cancel it because as the winner, you can actually cancel the governance.
Okay.
And he also, his major thing was to do with interest. He wants, because all the interest that comes from compounds not paid out to token holders, and he wants those interests paid out. I mean, so there's going to be like a discussion around that. But the major thing, it's because this guy was a trader at heart, he was able to use his trading knowledge to basically attack the governance system, whereas everybody who worked the governance system weren't traders, and so they weren't kind of clued up on it. And so now they're looking for somebody with a background in trading to go onto the committee as well to try and sort of like help kind of come up with different rules so that something like that doesn't happen again. But yeah, I mean, somebody who does trading 24/7 does get a deep knowledge of the whole system.
Because I guess the other thing with Compound, a few years ago, I seem to remember there was a smart contract problem, which led to, I think it was about $80 million being leaked out. And then last month, if I remember as well, Compound were in the news because they had a phishing attack. So somebody had actually got hold of the primary website or the DNS for the website and did a redirect on it, so that whilst you thought you were going to the official website, you're actually going to a phishing site. And so again, there was some sort of stuff going on there. So I'm always a little bit nervous and suspicious about whenever you log on to any site, is it really the real site, and what's the smart contracts that are behind it and everything. So yeah,
it's, I mean,
lots of stuff going on.
It is. I mean, compounds, they definitely do have a lot of issues. But then again, compound, they have like, a lot of money. At one point, I think they had like 200 million worth of T-bills, whatever, the government, US government treasury bills or something like that. And there was a lot of discussion saying, look, it's supposed to be a decentralized entity. What are they doing holding treasury bills? But the thing is, they had so much money coming in, they didn't know what to do with it, but they wanted somewhere safe to deposit it. So Compound is one of those protocols that's got a lot of issues. But
well, you look at it here, it's like over $1 billion in collateral. So that's a substantial sum, and it's also going to be a bit of a honey trap as well. it's going to be attractive for hackers and that kind of thing.
Yeah, definitely. I mean, but they have survived for this long, so
Yeah.
it's not
I mean-
like a Curve. Curve was well, Curve was just a creation, but the problem was created. I don't know if you remember Curve, the issue with Curve. What happened basically was the founder, another way of actually kind of like getting out of your position. If you're a founder, you've got all these tokens, so you can sell it onto the market, but then everybody knows you're selling it. So another way to exit is just to basically go and borrow against it. So the founder of Curve went and borrowed against Curve. I think it was like 100 or 200 million worth of Curve. He went and basically stuck it in the borrowing market and borrowed against his Curve holding. And he did that when Curve had a quite high price. And as the market came down, it came to a situation where it was almost liquidated. So he was selling Curve extremely cheaply, on the OTC market,
Okay.
so that he could save his position, because if that got liquidated, it could have tanked Curve.
And I guess we were talking about FTX earlier on, and I think there was some similar liquidation issues, which was what toppled FTX.
Yeah, well, that was CZ. CZ just, I mean,
Yeah.
he was the cause, because he just went and said, look, I'm going to sell my, I don't know, 500 million worth of FTX tokens. And as soon as he said that, everybody who had the tokens were busy, trying to get in before CZ. And yeah, that was just pretty much.
Lots of stuff going on. Eleni, you're being very quiet at the moment and just listening.
Just give me a second. I'll be back in a minute.
Yeah, no problem, Annie.
I like to listen to smart people, I guess.
Well, let me know if you ever find any.
Yeah, I'd like to find some too.
Yeah, I'd like to find some. I know a lot of people in the crypto space who think they're smart. I'm happy to admit that I'm not one of them.
You are. So yeah, we've got a couple of minutes left, and I just want to mention something that was talked about earlier when I joined, and I probably missed the beginning.
Okay.
And then I've got a quick question to Ken. So the AI agents in crypto trading, what are they, and what functions do they do? Crypto bots that would watch the market and would buy the stock or sell your crypto, buy when the price is right. What's the difference between them and the AI?
Okay. So let's start with me spoiling the dreams of people who are interested in AI. AI is basically the application of statistics, but it's the application of statistics over millions and billions of times very, very fast, which is where it gives what's known as machine learning, which is where when it sees repeatable things, it learns from that and it develops. So all AI is, it's statistics, right? And you use the statistics in different ways. So it might be that you're doing it on, as we said, an algo model. So an algo is an algorithm. Algorithm is just logic encoded in some way. And so you have some AI bots that simply look at the market. And so some of them might be as simple as they'll look at the price of an asset, whether that's crypto or a share or whatever, doesn't really matter. And if it goes up by more than a certain amount over a certain period of time, it will automatically place a buy order on the basis of it thinks the price is going to carry on going up. That's an oversimplified version. A cleverer AI might look at things like, is the price going up? What's the market demand? What are the volumes? So is there a lot of activity in this? Linked in with things like, but there are indicators. Ken was mentioning about indicators before. Indicators are simply metrics, so numbers around the trading. So there's one metric which is moving average. And all that is you look at the price over time, and typically you might have a 20-day moving average and a 200-day moving average. And this is where, again, you can see if there's a trend of going up or down. Then you've got things like RSI, which is relative strength indicator or index. That looks at how the price is compared to the amount of activities going on. So you build up an algorithm that might look at a set of these things and then might come up with a decision of if this, plus this, then do this. So think of it as a series of Excel if-then-else statements linked into a whole load of statistics. And that's how a lot of AI kind of works. That's an oversimplified version of it. So how does that compare to other things, were you saying? What was the question around that?
A bot that buys and sells at the right moment.
So the bot just takes that trading strategy and that algorithm and automatically executes it. So if it sees that, if it's given a set of instructions of if something increases by more than 1% in a day, and the relative strength index is at least 120%, and the volume is at least 1 million of them traded, and, then it automatically just triggers and runs. And the great thing about bots is bots don't sleep. So you can use them to trade while you're asleep. So if something happens to the market overnight, if Asia gets active in the crypto market, it's 24/7. So you can use bots to automate that trading. But as I said earlier, it can be very easy to use these automated bots as a way of simply very efficiently losing your money for you, because they can get it wrong and they can keep getting it wrong, and it goes from that. And you also have the other situation where you might have bots that are trading against other bots. So if bot A knows that the behavior of some other bot is a certain direction, it might do a counter trade to kind of like outsmart it. So there's all sorts of these things going on with it. So hopefully that answered it. And then you had a quick question for Ken, I think, before we finish.
Quick question for Ken. Ken, you said you're a long-term investor and holder, and I was like, oh, that gives me an opportunity to ask a question. What are the best practices of long-term investing? And then you mentioned that the best thing is to hold for a long period of time, like 8 to 10 years. And I was like, is that it? Is that it, or is there anything else?
Yeah, I mean, the thing is this: it's over a long period of time. It is going to be a better hold. I mean, I had a conversation with a family member about this, and they told me what they should do, because they've held. I mean, they bought basically the bottom one I told them to buy, and they say, okay, they were just basically they were investing, buying monthly. But then, because over time the market has gone up, they were telling me, oh, what should I do? Should I, so they're basically saying, oh, well, the market might go down. Should I sell? I said, well, if you want, you can maybe take some profits or stuff like that, but just maybe take 10% or whatever it is you feel comfortable with, and just put that aside and just say you're not going to touch it, let's say, till 2030. I mean, he's 24 at the moment. So I said, look, at 2030, you'll be, still just hitting the 30 years old, and hopefully you can have a fantastic return. And it doesn't matter whether the market goes up or goes down. It's a long-term trend. And I was telling him, you don't even need the money. I don't know why you're so fussed. And that's the biggest thing that people have, is that fear that, am I going to miss it, or am I going to do this, and am I going to do that? If you have a nice diversified portfolio in crypto, just some are going to blow off and some are going to make money. But as long as you're up more than basically from where you started, that's the whole point of it. And the biggest thing is, I think he spends too much time on social media. He's always talking to me about these influencers doing this and I just tell him the truth and say, I don't know. I mean, he mentions them. I don't know who they are, but these influencers, they're going on social media. They're saying, well, we're buying this, and look at my car. I did, I made X amount last week, so now I've bought this car and I've made X amount this week. Now I'm traveling, and I'm like, that really for me it's not anything I know about. But I told him, you've seen all my friends and stuff like that. 100% of all of them who are in crypto just did one simple thing. They just bought and held, and if they sold a little bit because they needed to. I had a friend who bought in 2017. In fact, he bought two specific coins. Actually, three. He bought, I think, Bitcoin, Ethereum, and then the third one was EOS. Now, out of those two, Bitcoin and Ethereum did well. EOS is down from his position. But the only time he sold was when he wanted to get married. And so he needed to sell. So what he did is he sold his loss maker, which was EOS. He was like, this thing is, so he needed to decide which of the three, and he sold that. He had another person who was like a really, really, really big on Dogecoin, and his Dogecoin holdings because I remember when that happened, he actually had Dogecoin and he had Litecoin, and he had his biggest holding in Litecoin. He still hasn't sold it, but because he's held it over a period of a long time, those holdings have multiplied immensely. And I think he's basically saying once he gets to a certain thing that he's got in his mind, he wants to buy a house, a certain house. I don't know. He's got all these. He's got his own goals, let's say. For me, those are the people I hang around with, and so those are the strategies I know. Where somebody who probably hangs around with traders will probably know the trading strategies, where I'm not really a trader, so I look at it, but I don't. The ones I kind of like, my friends and we hang around, we're kind of like long-term holders. Some of us bought a long time ago. Got another friend of mine, he tends to look for new projects, and he kind of sees himself as a VC, and he'll get new projects and he'll just wait. I mean, on average, a lot of the new projects he invests in take about 3 to 4 years before he gets a token release. So the token might even come out, go up and go down, but his tokens, as an early stage investors, are locked for like 3 or 4 years. So he has to basically be comfortable looking at going up and down and just hope by the time they release those tokens to him, they're worth something. So it's a completely different mindset. It's a mindset of where you look for quality, you look at the projects, you think, do I think this is good? Do I think it's going to go up? Do I think there's a lot of thought behind it? Whereas as a trader, I don't think traders care about the project. They just care, does it go up? Basically, different mindsets.
We're going to have to close off, I'm afraid, because we're out of time. But it's really interesting. Thanks, Ken. And just to make sure as well, this is not offering recommendations. This is just opinions and everything.
Yeah, this is just not investment advice.
Yeah, my best investment advice to his friend is probably don't get married, because that's usually the most expensive of all. But you can it depends upon your lifestyle, your opinion.
Well, I think I'll put it the other way: don't get divorced. That's the most expensive.
Yes,
Get
exactly.
married and stay married.
Yeah, or if you want to really make money out of that whole thing, become a divorce lawyer, and that way you win. So that'll be great. Right, folks, really sorry.
Jeff
thank
Bezos,
you.
the most expensive divorce in history.
It's an expensive lesson, definitely. Right, folks, sorry for having to close it off there, but thanks very much for sharing the thoughts and the ideas. Elena, I hope that answered the questions sufficiently.
Thank you very much.
Manny, thanks for joining us. Ken, thanks for joining us. Everyone else watching on YouTube, come and join us next week, and you can come and join in the conversation. Have a great day, folks. Bye for
Thank
now.
you. See you next week. Thank you.
Bye.
Bye.